Mastering Investing, a beginner's guide to passive income. Do you ever feel like you're stuck on a financial hamster wheel? You work hard, you pay your bills, but at the end of the month, you're right back where you started, just waiting for the next paycheck. All the while, you hear about the wealthy getting wealthier with this thing called investing, but it feels like some high-stakes game reserved for people who are already sitting on thousands of dollars. It's easy to feel stuck, like you're on the outside looking in. Well, what if I told you that's the single biggest myth in personal finance? What if you don't need a fortune to start, or a finance degree? What if you don't even need $100? In the next few minutes, we're going to completely shatter that myth. I'm going to show you, step by step, how you can take your very first $10, less than a movie ticket, and turn it into a legitimate, wealth-building passive income stream. This isn't magic. It's a simple, proven strategy that anyone can start today, right from the phone in your hand. The number one reason most people don't invest is that they think they need a lot of money to even get in the game. It's the "I'll invest when I have more money" trap. But here's the secret the wealthy have understood for generations. It's not about how much you start with, it's about when you start. The two most powerful tools for building wealth have nothing to do with a big pile of cash. They are consistency and compounding. Let's talk about a total game changer: fractional shares. Not that long ago, if you wanted to own a piece of a powerhouse company, you had to buy at least one full share. With some stocks trading for hundreds or even thousands of dollars, that was an immediate dead end for most of us. But technology has completely changed the rules. Fractional shares let you buy a tiny slice of a company for as little as a few dollars. You don't need $1,000 to invest in a major tech company. You can buy 1% of a share for $10. This means, with a single $10 bill, you can own a piece of the biggest, most successful companies in the world. Suddenly, the game isn't just for the rich anymore. You're in. Now let's pair that with the magic of compounding. Albert Einstein supposedly called it the eighth wonder of the world. Think of it like a tiny snowball at the top of a very long hill. As it starts rolling, it picks up a little more snow, getting just a bit bigger. As it gets bigger, it picks up even more snow with every single turn. Over time, that tiny snowball becomes an unstoppable avalanche of wealth. That's exactly what happens with your money. Your first investment earns a return. Then, next year, you earn a return on your original investment, and on the return you already made. It's your money making money, and then that money making more money. And look, I get it, because I started exactly where you might be right now. I looked at my small savings and thought, what's the point of investing $20? It's not going to make a difference. But I was so wrong. The act of just starting, of putting that first small amount to work, was the most important step I ever took. It wasn't about getting rich overnight. It was about building a habit and letting that tiny snowball start its journey down the hill. Before we even touch an app or pick a stock, the most important step happens right here, between your ears. It's a fundamental shift in your mindset. Most of us are taught to be consumers. We earn money, we spend money, that's the cycle. But an investor sees money differently. They see it as a tool, as a team of employees that can go out and work for you, 24/7 to earn even more money. The key to making this shift is a simple but life-changing habit: pay yourself first. This doesn't mean buying yourself a latte. It means the very first bill you pay when you get your paycheck is to your future self. Before Netflix, before groceries, you take a small portion, even if it's just $10, and you invest it. You're prioritizing your financial future above everything else. This simple act transforms you from someone who saves what's left over after spending, to someone who spends what's left over after investing. It's a profound change. We also have to reframe what investing even is. For a lot of beginners, the word investing basically means gambling. You picture scary charts with red lines plunging down, and you imagine losing all your money. That's not what we're doing here. When you buy a stock or an ETF, you're not just buying a digital ticker symbol. You are buying ownership. You're becoming a part owner in real businesses that sell products and provide services all over the world. When you invest in a broad collection of companies, you own a tiny piece of the engine that drives the global economy. You profit when they profit. You are no longer just a consumer buying their products. You are an owner sharing in their success. This is the ultimate mindset shift, going from someone who works for money to someone whose money works for them. Okay, you've got the right mindset. You know that starting small is not only possible but powerful. Now for the fun part. This is the exact step-by-step blueprint to take you from your first $10 to a passive income machine. First, you need a place to actually buy and hold your investments. This is called a brokerage account. Just think of it like a special bank account, but instead of just holding cash, it holds your stocks and funds. Years ago, this was a pain, involving lots of paperwork and high fees. Today, it's ridiculously simple. There are a ton of apps you can download that are basically free brokerage accounts. The most important things to look for are no account minimums. You don't want a platform that makes you deposit $1,000 just to get started. We're starting with $10. Commission-free trading. This means you don't get hit with a fee every time you buy or sell. This is a must-have for investors starting small. Fractional shares. Like we talked about, this is the magic feature that lets you buy a small slice of a stock. Opening an account is as easy as downloading an app and following the steps. It usually takes about 10 minutes. You'll enter some basic info, and that's it. You now have the same tool that the pros use, right in your pocket. This step might feel tiny, but I promise you, it's the most important moment in your entire investing journey. This is where you cross the line from just thinking about it to actually doing it. Inside your new brokerage app, you'll see an option to link a bank account and make a deposit. It works just like paying a bill online. You'll securely connect your main bank account. Now, do it. Transfer just $10, not $100, not $1,000, just $10. The fear might creep in. But what if I lose it? Let's put that in perspective. What did you spend your last $10 on? A couple of coffees, a fast food lunch. That money is gone forever with a 100% guarantee you'll never see it again. By investing that $10, you are giving it a chance to grow and work for you for the rest of your life. Making that first deposit builds momentum. It's a huge psychological win that proves to yourself that you are now officially an investor. This is the question that paralyzes most beginners. You've got $10 in your account. Now what? The number of choices is overwhelming. So let's keep it simple and effective. Instead of trying to find the one perfect stock out of thousands, we're going to buy a whole basket of them at once. Here are the best options for a beginner. The S&P 500 is just a list of the 500 largest, most profitable public companies in the US. An S&P 500 ETF, that stands for Exchange Traded Fund, is a single investment that holds stock in all 500 of those companies. Think of it this way: instead of trying to find the one magic needle in a haystack, you just buy the whole haystack. With one click, you're instantly diversified across hundreds of businesses in every industry: tech, healthcare, energy, you name it. If one company has a bad year, it's balanced out by the other 999. Over the last decade, the S&P 500 has produced average annual returns of around 13.5%. This is the classic set it and forget it choice for building long-term wealth. Now, let's talk about actual passive income. Many stable, successful companies share a portion of their profits directly with their owners, the shareholders. This cash payment is called a dividend. A dividend ETF is a fund that specifically buys a collection of these dividend-paying companies. This is where your passive income stream really comes to life. Every few months, these companies will deposit cash right into your brokerage account, just for owning them. A fantastic popular choice is the Schwab US Dividend Equity ETF, ticker symbol SCHD. It holds about 100 high-quality dividend-paying US stocks, and its current dividend yield is around 3.6%. Another great option is the Vanguard Dividend Appreciation ETF, or VEG, which focuses on companies that have a history of increasing their dividends every year. Its starting yield is a bit lower, around 1.6% to 1.8%, but the focus is on growth. Okay, this isn't a stock market investment, but it's a critical first step for passive income. A high-yield savings account, or HISA, is a type of savings account, usually from an online bank, that pays a much higher interest rate than the big brick-and-mortar banks. As of early 2026, many HISAs are offering rates between 4.0% and 4.5%. This is an excellent, federally insured, and practically risk-free way to make your cash work for you. It's the perfect place to build your emergency fund before you start taking on market risk. My recommendation: for your first $10, buy a low-cost S&P $500 ETF, or a dividend ETF, like SCHD. You get instant diversification, and you're on the path to both growth and income. The real secret to making this process passive is putting it on autopilot. You need to enable two critical settings in your brokerage account. First is the dividend reinvestment plan, DRIP. When you get a dividend payment, you can either take the cash or automatically reinvest it to buy more shares of the same investment. By turning on DRIP, you are turbocharging your snowball. That little dividend payment immediately goes back to work, buying more shares, which then generate their own dividends. It's a beautiful self-running cycle of growth. Second is automatic investing. Every modern brokerage app has a feature for recurring deposits and investments. You can set it to automatically pull $10 or $25 or $50 from your bank account every week or month and invest it directly into the ETF you chose. This is how you build consistency without ever thinking about it. You set it once, and your wealth-building machine runs in the background. You started with $10. You automated the process. Now let's make it meaningful. I want you to try the $50 a week challenge. Look at your budget. Can you cut one subscription, eat out one less time, find a way to free up $50 to automatically contribute to your investment account? It might not sound like a lot, but let me show you the mind-blowing power of consistency and compounding. If you invest just $50 a week, assuming a historical average return of around 8% a year, do you know what that becomes? In 10 years, you'll have invested $26,000. But see, your account could be worth over $39,000. In 20 years, you'll have invested $52,000, but it could be worth over $125,000. And in 30 years, you will have invested $78,000, but your account can grow to a jaw-dropping $430,299. That is the life-changing power of small, consistent investments over time. That $500,000 nest egg, generating thousands in passive income, all built from finding just $50 a week. This is how regular people build extraordinary wealth. If you're finding this helpful and are finally feeling ready to get off that financial hamster wheel, do me a quick favor and hit that subscribe button. We're all on this journey to financial freedom together, and I'll be sharing every single step. Congratulations! Your automated investing machine is up and running. So what's next? The hardest part: doing almost nothing. One of the biggest mistakes beginners make is checking their portfolio every day. The stock market moves. It goes up and it goes down. Watching these daily swings will only cause stress and lead to emotional decisions like panic selling when the market is down, which is the absolute worst thing you can do. Remember, this isn't a get-rich-quick scheme, it's a get-rich-for-sure plan. We are long-term investors. Our timeline is measured in decades, not days. If you have to, delete the app from your phone's home screen. Set a calendar reminder to check your portfolio once a quarter. You're not checking to see if you should sell, you're just checking in to see your progress and to remind yourself that the plan is working. Trust the system. It's my job to be completely straight with you. While this strategy is incredibly powerful, no investment that offers a real return is ever without risk. Anyone who tells you otherwise is selling you a fairy tale. The value of your investments will go up and down. There will be years where the market is down, and you will see your account value temporarily drop. This is a normal part of the economic cycle. Even dividends, while generally pretty stable, can be cut by companies during a bad recession. So how do we manage this? First, diversification. That's why we start with ETFs instead of picking single stocks. By owning hundreds of companies, the failure of one or two has almost no impact on your overall portfolio. Second, a long-term perspective. Historically, the market has always recovered from every single downturn and gone on to reach new highs. Your job is to stay invested and not panic. Most importantly, you need a safety net. Before you get serious about investing larger amounts, your first goal should be to build an emergency fund with 3 to 6 months' worth of living expenses. This money belongs in a safe, easy-to-access place, like the high-yield savings accounts we talked about. This fund is your shield. It ensures that if you lose your job or have a big, unexpected bill, you won't be forced to sell your investments at the worst possible time. Safety first, then wealth. For years you might have believed that building wealth and earning passive income was a game you couldn't afford to play. I hope that today I've shown you that not only can you afford to play, but you can start winning with just $10. The secret isn't a six-figure salary or a lucky stock pick. The secret is starting now, no matter how small. It's the habit of consistency, of paying yourself first, week after week, and it's the unstoppable force of compound growth, turning your small contributions into a fortune over time. You don't need to be wealthy to start investing. You need to start investing to become wealthy. The best time to plant a tree was 20 years ago. The second best time is right now. That first $10 is your seed. Go plan it. If you want to see exactly how I would invest my first $100 across different ETFs to build a balanced portfolio, click and watch this next video right here. And I want to hear from you. Leave a comment below and tell me what your very first investment is going to be. Let's get this journey started.